Welcome, everybody, to the Dialogue with a Conscious Thought Leader. We have Peter Blom, longtime CEO of Triodos Bank, one of the leading ethical banks. I will check if that is even the right wording to describe, to title Triodos in Europe, certainly. Again, we're going to do a dialogue. I will start off by asking some questions, setting the scene. And very soon, you're going to be invited to switch on your cameras and personally intervene in the interview. Peter, hello. How are you doing?
I'm fine, thank you. Very happy to be with this group.
So I wanted to quickly do an intro. This is typical, and I will do. You actually have been, according to the booklet that I read with high interest, you wouldn't consider yourself one of the co-founders originally, but you were there from day one, essentially, I understand, and been around in the bank for, I understand, and its predecessors, the foundation, for roughly, I think, 40 years, in the last 20-something years as their CEO. So I think it's fair to say, I myself, I'm not a banker, that you've seen Triodos from the initial foundation all the way until you left Triodos, from its infancy, all grow up. You participated in its development all along. And I see that you have quite some footage in the classical banking sector. I see that you were, until 2023, a supervisory board member of the Dutch Central Bank and a board member on behalf of small and mid-sized banks in the Dutch Banking Association. What I'm trying to make here, the point I'm making, you seem to be extremely versatile, knowing Triodos, the story and what it takes to be an ethical, socially minded bank, as well as the traditional banking side, because you've been intimately involved. And one highlight that I found very interesting in your CV, which apparently you picked up more of since you left the CEO job, you were engaged in a lot of boards or foundations, Stiftungen. For example, one is the Nature College. Another one is a Scientific Council for Sustainable Agriculture and Food. One is on the Land Trust Organization. Another one on education. I think it's called Erasmus Praise. Or the chair of the board of the Robin Food Foundation. Where does your interest for agriculture, food, education, nature stem from? And that's maybe an unusual question, because I found it very interesting for your pedigree and your knowledge that you invest so much time in these aspects.
Yeah, that's very interesting. Farming and food always has had my attention as a banker, because it was one of the core sectors for the bank when we started in 1980. So I was traveling around visiting farmers and see how I could help them with financing their transition to organic farming or to scale up. And it also reminded me of the family I come from. My mother was very keen on healthy food and gave us, as young boys, me and my two brothers, a lot of organic food. What was not always very tasty, but it was healthy according to my mother. But making a long story short, I really enjoyed to go to farms and to really experience the relation of farmers with the land and the wholeness of that. They really were talking about something what I knew much less as a city boy, a boy from the city, and I really enjoyed that farming. And I felt food and agriculture are a basic need for people and provide us with health or not, and not just food. It's also going to a farm, seeing how nature helps us, supports us. So that was really an interesting area for me. I've also seen the struggle of farmers, particularly organic farmers, and it has not been easy to help them in a business-like way. It is not just an ordinary business, I would say, farming. It's something like an NGO taking care of nature, and doing good stuff, and on the other hand, producing our food, delivering an economic value, and how to combine the two is a huge challenge, I would say. And I had a lot of sympathy for getting on with that for farmers, because it's not because of the high income, it's really because of the connection they feel with the land and what they produce. So that is why I like a lot about particularly organic farming.
Thank you. Actually, I thought it was telling because it's one of the things that will come very, very obvious in your story in Triodos, but actually for Triodos in particular, and I guess for any kind of ethical banking, it's strongly rooted in care for the real economy. And that'll become more visible. Help me with the nomenclature. Is it fair, for the benefit of this dialogue, that we just simply label Triodos for now as an ethical bank and talk about non-ethical banks as traditional banks, or do you prefer other terms to simplify this dialogue?
Yeah, there always is a big debate in the movement.
So help us with simpler wording here.
So you have social conscious banking, you have social banking, environmental banking, green banking. I find ethical banking a little bit prestigious.
Presumptuous.
Yeah. Because I mean, who decides what is ethical and what is not? It's like sort of putting yourself against others, and I find that not you really don't engage then with all the people and the effort they make to contribute something to society. Sometimes from a very difficult place. So ethical, and maybe there's also something more from the northern part of Europe, would not be easily used. I know that in Belgium and also in Spain, it was used for Triodos quite a lot.
True.
But it's ethical is a little bit of a critical. What I really liked when we developed the Global Alliance for value-based banking, that value-based banking tells you much more about where we are about. It's economic value, it's social value, it's planetary value, if you like. And value creation is more like an entrepreneurial approach, a more inclusive approach, and doesn't, put you against others. Everybody wants to create value. Only what we were saying as Triodos Bank and also as other banks in the global movement of value-based banking, we want to orientate us on human values and what humans need. But it's still about the creation of value longer term. So that is why I prefer today value-based banking as the sort of typical sort of banking we are in.
Okay, that's a very interesting, elaborate answer, which again already speaks a lot about Triodos' purpose and nature, because I took away two things. One is very, very value driven, and the other one is to create value. So the whole notion is central to it. Interestingly enough, in this dialogue, we have a prior participant in the dialogue, Professor Laszlo Solnay, who referred to 3 examples of conscious business models. And there was one in the US. It was, it dropped my mind, the outdoor maker that now got famous because he, Patagonia. Exactly, Patagonia. Yeah. There was a company in India and Triodos Bank. And the interesting part, and that's where I would like you to comment, was all 3 were based on very, very deep value roots. Actually, they were almost philosophical, spiritual. In the case of Triodos, anthroposophy, founded by Rudolf Steiner.
Yeah.
Maybe you can comment on those roots and how relevant, obviously they must have been very relevant, these ethical, spiritual roots were to Triodos back then and probably until now.
Yeah. I think the roots of any organization are very worthwhile to explore, even when you are a company of 200 years, has gone through many mergers and acquisitions. It's very important to sort of find your roots and what was the intention with the founders who have created your institution, your business, your bank. In the case of Triodos, it was clearly the founding members, and I was sort of jumping on the bandwagon straight when it was founded. It was very important to have a clear picture about what do we want to help people with. Is it just financially, or is it also socially, and it's also culturally? So the whole human being, and I would say that's an anthroposophical sort of definition of how to approach things, that was at the basis of the bank. And it made also the name of Triodos quite interesting. It comes from Greek, Triodos, 3 ways. And we very much in the bank use these 3 ways to assess a new business coming to us. Is there a strong spiritual leading idea? That was one way to look at it. The other way, was it properly socially embedded? How are staff involved? How are customers involved? And the third way was really about the financial and economic side. Is it a healthy economic initiative? Because that's also important for a bank. And those 3 roads, Triodos, was very much our approach in banking, and very new in banking, I must say, because normally banks only look at the financial side. So it did translate also in the name of Triodos and also in the practices of the bank, making it a more holistic approach than just a financial approach.
Okay, this is interesting. I want to dwell just a little bit more, again, because I think there's messages for us. It's not only to repeat the history of Triodos, if it wasn't for a specific message. I mentioned that there was a lot of notion on helping the real economy. And the other interesting part in your initial saga on how it was created, and I'm quoting here, was the aim of promoting the conscious use of money. And I think you referred in some other publications I read, again, to the idea and the consciousness we give money, the relationship we will have money. So this is a very broad philosophical question, but I'm very curious in what point you think it's key to be clear what relationship we have with money and the consciousness we have towards money.
Yeah. I think what has been all the way through the Triodos history is dealing consciously with money. And what we mean by that I think we want to make very clear that money is not neutral. Money is a tool, but also always gets the color of the people with certain intentions to do something with it. So it's a very powerful tool, but with money, it's not a sort of objective intrinsic value. It only gets its value and its impact when people are connected to it with their intentions and the way they invest or they pay things with it. So in that sense, we felt dealing consciously with money is a very powerful tool in creating change, making things possible. And therefore, to ignore that part of society in every real economy transaction is sort of mirrored by a financial transaction. And actually, the financial transaction has become more and more important. So if you want to deal with the real economy, you better also deal with the sort of parallel world of money and making people more conscious about it. So I think dealing consciously with money was in the bank practice for us, that our depositors were informed about where we were investing their money. So we made the direct connection through the balance sheet and made very clear it's not that you put your money in the bank and it stays there, but actually the bank is doing things with it. And you are co-responsible for it by putting your money in the bank. And what can you do with it? And what do you enable with your money? So I think that was pretty new in the 80s when we started. And it has become more of since the lot of information technology is available to us, now many more people see that as a reality, that money is not an abstract neutral thing, but it really controls things, enable things, and you have to take responsibility for that. So that is really the connection to monies.
I mentioned the aspect of making an impact in the real economy. Before I go there, I would like to dwell more on the money. There's an interesting aspect what I picked up. You talk at some point in time about 3 types of money. One is gift money, the other one is loan money, and the third one is transaction money.
Yeah.
And I will quickly ask you to explain, just for the audience, what is what, but most importantly, in which way did you use it? Because obviously you were probably in the bank very conscious which type of investment, which type of needed what kind of money. So I thought that was very interesting to understand.
Yeah, yeah. Now, I think that the three types of money are important to take them in their own sort of power they have. I think the purchase money really has a direct impact on the economy. And I would say fair trade is very close to the using purchase money in a conscious way. By really buying certain things, you enable a certain type of economy, a certain type of production. I think it's a different sort of conscious than investing in a company. That's a much longer term transaction. You actually enable entrepreneurs, business owners, institutions to realize value over a longer period of time. It's a different sort of relation than just buying a product. And I think the most interesting one, in a way, is the gift money, because I think gift money is the most productive one if you are able to allocate it in the right way. Gift money is without strings attached and makes it really possible for an entrepreneur, but also for an artist or for a school, anybody who needs this gift money to realize ideas, to realize free value. I think for society, that is a very important value creation process. So the most productive, effective is probably gift money, if you can organize it in the right way, where all the other ways of money, there are more strings attached. So by using these three types of money and using it consciously in the bank day-to-day practice, we were able not to say, well, you only can be having a loan if you are repaying it and paying interest. Sometimes we deliberately said, well, we think we can find some people for you or foundations to give you money because your project is fantastic, but it's not bankable. Maybe it's bankable in the future, or maybe it's sort of good for society. So the value of gift money always has been part of the consciousness of the bank.
Interesting.
And that makes it much richer, much broader. And also you make more clear that it's not always a bank is about repaying money and paying interest rate. It's also allocating the right sort of money for the right sort of projects. And we did a lot of work on that with foundation work. Gift money from depositors who said, well, part of my interest rates I deposit for gift money. So creating this other consciousness of money, I think, is very important in the richness of what is needed in society.
Very interesting. That sets you apart, and I'm generalizing, obviously from more Anglo-Saxon ways that believe that if you give away for free, it needs the strings attached, it needs that pressure. In order to repay, and we all know the Anglo-Saxon situation of paying for your student loans, which I guess is a different principle. Before I go on, I'd like to quickly ask a quick question to the audience. You can see it in the chat, because I'm very interested, and I'm using the term that you coined, value-driven bank. Okay, and I'm saying here, to your best knowledge, because it's perfectly fine if you say you don't know. So maybe we get some answers. I'm just curious. Myself, I'm a customer of Triodos for many, many years. It's not that I signed up since we do the interview, because I was convinced, because my prior wife, she worked in the Waldorfschule. And because they had close ties and were co-financed by the Triodos Bank in Spain. So she said, I think we should become a customer. So if people want to answer that in parallel, that would be interesting. Let's turn more to the social impact. And I know this, again, is maybe a quick buzzword, and you will help us maybe to define it better, what it meant for Triodos and what it should mean for any value-driven bank, which is investing and impact investing. It obviously matters hugely where you as a bank put the money that is given to you through loans. And we talked about the different forms of how you put it, financing a purchase versus financing a loan. Maybe you can speak to the whole approach and philosophy that you applied on, if we want to make an impact, this is our chosen approach to do so as a value-driven bank.
I think for Triodos, in many cases in its development, when in society they invented names for things, we were saying we are actually doing that for the last 10 or 20 years. So if I give you the example of depositors knowing what is being done with their money through the balance sheet, that is actually impact investing avant la lettre. We didn't call it like that. We called it more transparent banking, but you could really show to your depositors what impact they will have or can have with their deposits. So for me, impact investing is a new name for something we did already for a long time. What we learned from impact investing or for impact banking, because there are two different things, but are both on impact, is to show more in a dashboard, in reporting what sort of impact we have achieved. Now I would say I'm a little bit or sort of have two ideas. I think it's very good to show what your impact is, but sometimes it's also a little bit too instrumental. So I have impact now, I can tick off this box, I'm okay. Where
That's
if you are
interesting.
close to the entrepreneurs, you know how many things they have to go through to have real impact. And sometimes it looks like impact, but there's not, well, you name it just in a different way. So the reality of the day-to-day entrepreneur trying to do something good for society cannot always be translated in nice, clean impact figures. So I do feel impact is something what we have to do to be transparent on what we have to achieve. But at the same time, we should not make it like that is the end of the world. And if we have all achieved impact investing and reporting on it, then we are done. I think it's much more complicated than that.
Let me pick up an example, which actually is a question from the audience, from Shimpi Kovani, I think she said from India, who asks about one specific aspect, which has little to do with impact, actually nothing. It's, what are your thoughts on the heavy interests that bank charges to the poor and helpless who need it? And I think it's an interesting question because it has nothing to do with directing investment, but obviously there's a negative or, if changed, positive impact. Maybe you can speak to that whole dilemma in banking, how Triodos try to deal with it. I think it's a great question.
Yeah, I think it's pretty different from what we see in Europe, where we had relatively low interest rates and low margins actually on interest rates paid and charged. So I think in Europe, it's sometimes a little bit more than 1% margin what banks charge on the sort of the deposit costs they have. So it's not so much an issue in Europe. It's a little bit more in the US, but I think particularly it's an interesting topic with microfinance in emerging markets, because they charge quite substantial interest rates while they pay relatively low on the funding. One thing you have to say, if you go into the smaller loans, then actually you need a bigger margin because the costs are simply much higher than big tickets. You can go with smaller margins. It's simply mathematics. So there is one aspect to that. And it's interesting to see that in many cases, the interest rates in microfinance institutions are still quite more low than what they call the interest rates of the loan sharks, the free market cowboys. So I would say at the end of the day, you see there is a reasonable profit for those institutions, and for the people themselves, the interest rate in an interesting way is not their biggest concern. It's more about access to capital than paying a high price for capital. And access to capital means that they can start an economic activity, gain some profits and repay their loan. And in quite a lot of studies, you find out that people, the poor people particularly, who want to set up a business, are much more interested in having easy access to money than paying a low interest rates. Now, if you grow bigger and you have bigger amounts for your SME business and not anymore microfinance, then interest rates do become more important. But then it's also possible to have lower interest rates because it has become more efficient for the banks to lend that sort of money to them. So it's not always ideal, but there are some good arguments why in microfinance, particularly the small loans, the interest rates are relatively high, where in sort of SME lending, they can be lower and help entrepreneurs more if they pay not the highest price. So a little bit banking technical explanation, but I hope it answers the question.
Interesting. I will wait if there's further follow-up questions to double click and to grill you a little bit on this. One interesting aspect I wanted to certainly investigate, when you clearly articulate, and I know it will resonate with the audience who typically are conscious entrepreneurs, conscious business people of various flavors, colors, consultants, coaches, but kind of believers that really believe in economy to be more conscious. So when you speak to invest in companies that have products and services that meet a real need in society, I'm sure that for most people, intuitively, that rings a bell. Now, I'm not a banker and an expert in finance products. I did my studies in economics, but the little I do know is that many of the financial products, while there are very obvious examples, day trading, what we call speculation in gold or crypto, which don't have an intrinsic value that they basically generate any money. But there's many others like futures or hedging, which as a product may be neutral, they serve a real purpose. It all matters with the intention with what they're used. So how did you stay clear between using some of these products, which can be misused, versus using them properly and saying, this is toxic, we don't do it, or this is okay, but we better check it properly because it can be of use if we continue to use it with a proper intention. Give us examples and talk us through the dilemmas and how you kept clean of this.
Well, it can be a dilemma if you take the position that you say banking is about money, making money with money. If that's your sort of starting point, what is in most bankers' consciousness what they are talking about? It's not about financing the real economy. It's about making money with money. And then very easily you use all sort of instruments, market instruments, to see if you can make money with money. Derivatives is a good example. I mean, the whole problem in the financial crisis was about starting to use these instruments for making money with money. And I think in Triodos, we always had a very good eye on the ball that we say, well, it is about the real economy and what they need. We can imagine that there is a certain hedging needed for their operation. So yes, that can be provided, but it really helps to reduce the risk through hedging. If it becomes hedging because of the hedging and making money with that, we were clearly saying no. And we have been approached several times during the financial crisis where guys from Wall Street said, why don't we create something like an value-based derivative? So as a sort of separate, nice box of investments who are actually virtual and not real there, and we can sell that and you can make a lot of money with them. And we always felt then we would not be true to our mission. Our mission is really about helping the real economy. Always have in mind the entrepreneurs you're helping and really seeing it from their perspective, what they need and what they don't need. So I think fundamentally is about the idea, can you make money with money? Or do you start really to see that actually value creation starts with the real economy, with the entrepreneurs and what they need to create value? And you are a sort of consequence of that as a bank and not the other way around. What you have seen quite a lot is that, and you see it almost in the language, that banks have looked at the real economy as a tool for making money with money. So they were gathering assets, looking for new assets, where assets is a very abstract term. If you look for helping entrepreneurs, it's a totally different approach. Looking for assets makes it all more transactional, creating possibilities for making money with money. So behind the approach of value-based banking is a very strong belief that it is about serving the real economy and not the other way around, where the real economy is actually serving the financial sector more and more.
Let me follow up on that, because for most people, and this again, I'm a layperson, you may even want to share generic numbers, not Triodos numbers, it's a matter of profitability. And I think most people believe in believe in some data that some of the financial extremes, unfortunately, seem to be more profitable. So how did Triodos specifically manage the expectation connected to the fact on how you were financed and your financial investors looking for the maximum possible return, possibly, and how did you manage to separate yourself from the pressures of the financial market, always assuming the type of investment that you do may generate less return than if you go to more speculative aspects of generating money from money?
Yeah, there is not a sort of one answer to that. I mean, there are different answers. I think, first of all, most of the value-based banks are relatively small, and particularly the banks who are positioned like in Europe with what is a small margin business banking, they need a big scale. And therefore, scale really matters in areas like Europe. If you go to Africa or Asia, there are much bigger margins for a bank. So there, the scale is less important. Then it's more that you are having the possibility to provide capital, puts you already on you create already a big advantage. In the US, already margins were in Europe, they're a little bit more than 1% interest margins. In the US, are 3 to 4%. And that's a big difference and has a big impact. So in Europe, scale is quite an issue. In other parts of the world, it's less of an issue. It's more having the right management and having the right market penetration, so to speak. I do believe that there are pros and cons on focus on sustainable businesses or value-creating business. The pro is that you have, in general, very committed entrepreneurs. It's a growth market in general, but it's also innovative and new with risk attached to that. So that is balancing out more or less what is happening. If you look at the Global Alliance, that is this alliance of value-based banking, 75 banks at the moment. If you take their numbers on profitability, they are about the same as the 25 average profits of top banks in the world. So it's not lower. Only the European ones are lower because of the scale issue. But in many other situations, actually, they are as profitable as the big banks. But what I found even more interesting of this study is that normally a bank in the world has about 30 to 35% of their total assets in the real economy. And that is decreasing. Only a third is in the real economy. The rest is going around in financial markets. In the value-based banks, that was close to 70%, twice as much. So to be proud of, I think, as Global Alliance banks is much more that, well, 2/3 of our balance sheet is in the real economy. What also incurs cost and risk and so forth and so on, and still be able to make a profit similar to the big banks, I think is a real evidence that it is a good way of doing banking, and particularly also a better way of banking to serve the real economy, because they are much more connected to the real economy.
Okay, interesting.
I hope this makes sense, that you understand what I'm trying to explain.
Thank you. We're now at 38. I'm inviting those that want to, that you switch on your cameras. I'm going to ask another question, but soon invite you to ask your questions personally. Those that are less familiar with Zoom, at the top right, next to the smaller and larger button, you have a button, in English it's called the View, where you can then switch to a gallery view if you care to just scan through and get a flavor for the audience. So you can change the view versus the speaker view that is typically on and highlights the speaker at the time. What leads me to do as a follow-up question before I open the microphones, if there's an online question, following up specifically on what you said, where you said only 30% of the financial transactions from the top 25 more traditional commercial banks is actually in the real economy. The rest is purely in money now.
Of the assets, not of the transactions, of the assets, the balance sheet.
Thank you. I know that everybody here on the phone is obviously totally aware about the systemic risks that these huge mega banks provide. And we recently have seen that again happening with kind of unfortunate outcome for the banking infrastructure, I guess, in Switzerland, where banks don't fail, they get bigger, and the systemic risk to economies. We all remember what happened then to Iceland, and of the Lehman Brothers, et cetera, et cetera. So my question is actually very much to the point. I'm not here to ask you, is that a problem? Because I'm expecting you to say, yes, it probably is a problem. My real questions are, how bad is it? And what do you, from your perspective, believe, is there a cure?
I think we were sort of expecting that the banking sector would learn from the financial crisis, that things and some of the things have improved. So the equity ratios have gone up. What is positive? So there is more of a buffer in the banks to absorb certain risks. But what has not been regulated sufficiently is this financial products, these financial markets where banks are involved. So there is still quite a system risk and a growing debt. There is a huge debt in the world, and it's growing and growing. It's almost like our economic system can only exist if we create more debt, and we hope that we can repay that debt in the future, but actually we don't really believe it. We hope we can sort of roll it over, and so forth and so on. So I think that is a significant risk, that the levels of debt in the world go up and are growing much faster than the real economy is growing.
Mm-hmm.
Having said that, that's one problem. The problem is even worse. We have to go to an economic system where maybe we should not go for growth, but maybe even for degrowth or for a different sort of growth, green growth. And therefore, I feel that the current system is not adequately tuned for that. So there is a real sort of push in the banking sector to grow and to grow and to grow and create more debt. And I think that is where we have to be careful that somebody is like the emperor's clothes, that we say, well, we cannot afford this. And then you get a sort of implosion, and we get the same situation, or even worse, we had in 2008, 2009.
Mm-hmm.
So it is quite critical. But
and what do you think is a cure from your perspective?
As long as everybody believes it will continue, it sort of continues. The cure is I think that we should regulate much more thoroughly the capital ratios of banks. So I think we should really look at the capital as such and say, when banks finance brown assets, so to speak, they should have a much higher capital condition than they finance green assets. So you relate directly the risks and the equity base of banks to what sort of economy you want. And then you get a better balance between the transition needed, the finance needed for transition, and how banks should look like. And I think this significant higher reserves will really bring back the growth potential of the economy. But only sort of reducing the growth is not enough. You also have to substitute it with green growth, and where brown assets go down.
Okay.
This is a fundamental issue, and most bankers, if you talk to them privately, agree with you, central bankers included, but it's very difficult to do that as a single bank. It's really a system. You need a system approach for that. And that is why there are initiatives like the Sustainable Finance Lab, where we have the Rethinking Finance Hub of the Club of Rome, to look at those systems changes who are needed to calm down the real economy through less leverage of the financial sector on this real economy. Okay. So that is where I think the cure on a big scale is.
Okay. And there's a specific question talking about, when we talk about risk, I mean, the monetary system, I think it's called the fiat money. And there's a specific question talking about risks and risk in the financial sector to crypto. Do you think cryptocurrencies, okay, I'm not going to ask whether it's a worthwhile investment or not, because I consider this speculative, but do you think cryptocurrencies as a phenomenon is a serious risk? Just as a short answer, if you have a clear answer, yes or no.
Yes.
It is a risk. and you would stay away from it. Okay, interesting.
Yeah. Yeah, but I think I would even stay away from it for a more principal reason, because I feel there is a completely disconnect what is happening in the real economy. It has nothing to do with the real economy.
Okay.
I mean, there was a sort of thinking with cryptocurrency and particularly how transactions were done in a new way that would help to have a more efficient payment system. But that is already being absorbed and taken over by the banks by now.
Okay.
Where we remain with a crypto system, what is highly speculative. It's a speculation game. The only problem is it costs a lot of energy, and it costs many people who don't know what they're going into. They lose a lot of money because they're investing euros actually into it, and they can lose it, and others win. So for me, it's too much of a game, and I'm not in favor of it. It's the opposite of dealing consciously with money.
Okay, thank you for the clear answer. I have a question. I'd like to invite Hendrik Jan. Do you want to ask a question online yourself? Switch on the camera and be with us. Otherwise, I will do that on your behalf.
It's a very Dutch name, Hendrik Jan van Es. He is Dutch.
Well, I am very Dutch.
Go ahead.
Yeah, my question is about, I'm interested in the fact that ethical banking seems to be more profitable in comparison to traditional banking.
Or at least as much.
Yes, but since they're more invested into the regular economy, which means there's also more risk, there's something that offsets that. And conscious business is it's my interest. So you probably invest in different kinds of companies. And would you say well, that's where I'm interested. These different kind of companies, are they less risky, making it more, making the fact that you are able to offset the difference?
I would say, but that's a very general answer, and there can be differences between countries and regions and sectors. But I think in general, investing in the real economy or financing the real economy is reducing the risk. If you if you start to sort of play in markets where it's not so clear what part of the real economy is impacted or involved, who can repay you, then you have a real issue. So I think the real economy approach is reducing in general the risk. Now you still can make the wrong decisions as a banker to go in wrong sectors and having the wrong entrepreneurs. I mean, that's still you need professional skills to assess the risk of an entrepreneur. But in general, to stick to the real economy is a mitigating factor for the risk, is my view. Of course, there are more operational costs sometimes involved, but that is something what affects more the balance sheet. And there's always the trick: can you reduce the risk cost and compensate for the operational cost with that? So that's the game you have to play as a value-based banker. Do you have enough sort of low risk cost to really pay for this slightly higher operational cost?
Okay. I have a related question which builds upon that. We talked about the profitability being very much at par, and you talked the specificity of the European market because of the lack of scale, where it may not be at par, but there was an interesting information. And I think to have understood in one of the reports that for some time, I don't know if this is still true today, that you had a lot of incoming deposits, people giving you their savings, and it sounded, if I understood correctly, you almost had a problem of finding useful, socially ethical, viable investments. And here's my question. We have a lot of people here that deal with conscious business. And one of the complaints many conscious businesses that want to be conscious have is that they do not necessarily find sufficient, easy, or enough conscious investment capital. So what are they missing? Is there a shortage of them knowing where to get it? it seems as if there's enough, obviously there's an end to it, around. What is your reading of the market and so many more conscious business people that appear to have difficulties finding more value-based money?
Yeah. I think it's not so much about the liquidity as such, but it goes with the risk appetite.
Okay.
People investing deposits in banks are having a very low or no risk appetite. So many people are very conscious about how they invest their money in the bank. And you should not say invest, but deposit their money in the bank, so there's no risk. And that very low risk appetite you have in the bank do not always match with the much higher risk need of entrepreneurs. And particularly new sectors, entrepreneurs, and I've seen that also in wind energy, solar energy, but also in organic farming, other things. It's a real relatively high risk when you start something like that. It's new, so there are no data available. Entrepreneurs are not always very good entrepreneurs, so this mismatch, very risk averse depositors versus a slightly higher risk than average of people starting new businesses in this new conscious capitals area, that is the problem. And that's the problem also for other banks in general, but for value-based bank, that's even a little bit more the case. So yes, we had a lot of deposits coming in where we actually would love to have more risk capital directly channeled to businesses. In that sense, having deposits is not always helpful to finance the new economy. It's almost very limited in its risk return possibilities to use it.
Okay. We have a very interesting question from Professor Laszlo Solnay. If he's able to unmute and get on the camera, there he is.
Yeah.
Go ahead with your question, Laszlo.
Yes, I would like to ask Peter, what do you think about the main obstacles, main barriers of the replicability and growth of values-based banking?
I think there are a couple of one. I think particularly in Europe, it is the sort of regulation we have is more applied for big banks than for small banks. So relatively the weight on the organization of regulatory measures is quite big. And particularly with transaction monitoring, by sort of checking who are your customers, that is for a small bank relatively big. Also for other small banks, but most of the non-value-based banks are taken up by bigger banks, and then they can use that for the smaller banks. That's quite a hurdle. I think the other thing is simply not enough people to work in these banks. I think it requires a different sort of management, leadership, senior staff that can run those banks out of a real purpose-driven approach. And it is not a simple thing like, well, we have a bunch of bankers and they just add a little bit of purpose and then it will work. It's a more fundamental approach in your whole business model, as I said earlier. So it's not so easy to find the people, the educated people in finance and banking to fill the positions that you need with these new banks. And I think that are the main two reasons why it's not growing. You also have to realize that big banks are starting to be more look green and environmental. So for big groups of people, that's enough. They feel if my banks is just sufficiently showing that they have a green image, then I'm happy with that. Still, the banks can grow the value-based bank enough. I mean, Triodos for many years grew with 10, 20, 30% per year. Bigger growth is not easy because you really have to adjust your organization all the time to bigger growth. So that is also a limitation of fast growth of the banks, particularly if you are in the real economy. Having said that, I do feel that our effect of value-based banking is not only about growing the value-based bank, but also showing examples to the mainstream banks to be more green in their effort. And I've seen many situations where the sort of advertisement Triodos had 10, 15 years ago are now used by the big banks. I can also see that in the co-worker group of these banks, the employees, there is more sensitivity for that. And I think step by step that will also go to the leadership. So I think that is a hopeful development. So I think it's not only value-based bank growing, but also impacting indirectly the big banks. And also central banks, so to speak. Central banks are also more sensitive to this approach. What I think was 5 years ago, not the case. So that's also a positive development. So I see as agenda setting, showing that it can be done, showing that it can be done profitably, and hopefully changing the whole financial system bottom up in that way.
Beautiful
answer, but it is more sort of complicated than just one thing.
Actually, I like that answer a lot because it is very useful. We had another question too that went into the how do you see the future of value-based conscious banking? But I think your answer addresses this significantly on what role you think Triodos Bank, how much growth intrinsically with learning, other banks learning from Triodos is possible. We have a hand up from Judith. If you can keep the question and the answer short, because I have 2 more pending before we wrap up. Judith?
Okay, so my question is to Peter that do you have any special policy, and if yes, what, for your hiring process to make sure that your employee represents your value-based concept?
Yeah.
And how you ensure
that?
No,
absolutely right. And it's one of the most critical success factors if you do that thoroughly. And I think the way I did it when I was talking to senior people had to be hired by the bank was I took time for them. So it was not a short, quick thing. And the first thing I ask always about their biography. So why did they end up now with Triodos Bank? Is that a real story where they can see, well, first I did that, then I had this experience. So I really want to put their decision to come to Triodos in the context of where they have come from as a human being. And I think that is much more important than just doing the ticking the box of the skills. Because this journey, if that is a real good, clear journey, and they can express that where they are, that will give them the power to get through even when it's difficult. Because also in Triodos Bank, it's fun, but it's also hard work, and you have to combine banking and purpose, and you have disappointments, you have to defend yourself. So I think the journey part, the biographical part, is very important in the bank. And I always was amazed when I talked to staff how deeply they were convinced about why they made this choice. And I was very proud when they said it's even better than we thought before coming in. So normally people say, well, they hear the nice stories and they come in and say, well, it was not so nice after all. But if you can prove that actually there is a complete consistency with the co-workers about the values and how things work and how to deal with the challenges, because there are big challenges. I think that is the sort of culture you want to create. And in that sense, we were attractive for particularly also very bright people. They were not so interested in the long careers in normal banking, but they wanted to explore what this value-based banking is in reality. So I think you have a lot of advantages if you come with a purpose and a serious approach, particularly also for very smart people. And you need them. You need them a lot because it's not easy. It's hard work.
Thank you very much.
Thanks. I'll actually skip the next question. I'll just leave it in the chat. I thought it was an interesting question that Judith had thinking about how to preserve culture. And I found that it was an interesting practice. I don't know, Peter, if it's still going on. Originally, I think it was called the Monday meeting, where at the close of these meetings, one of the colleagues is citing the motto of social ethics. And I think somewhere it says the motto expresses the essence of the bank's social mission, the relationship and interaction between the individual and the community.
Yeah.
So I copied that into the chat and I'm sharing it here. There's a German, because it comes from Rudolf Steiner. So I took the original, the English and the Spanish version, because we have many Spanish readers.
Yeah.
So I thought it was an interesting aspect on how you keep it very alive and go to the roots. My final question speaks again, specifically where we started, to you as a person. As a leader, you were the CEO for 23 years, and in conscious business, conscious capitalism, we like to look at conscious businesses, not in an exclusive way, as having a higher purpose. It was very obvious how deeply rooted Triodos is in a higher purpose. The conscious culture, you just answered Judith's question, and I wanted to add this that speaks to the emphasis on culture and why it matters. And as well, it was obvious that you went beyond shareholder value and thought about all stakeholder value, making impact so imperative. There's a fourth pillar in what we consider conscious capitalism, which is conscious leaders. In which way, and I'm not asking you to think about yourself, do you think to be successful as an ethical company, not limited to a bank, what do you think it takes for a leader to be conscious?
I think you have to, and it's something what is not like a sort of heavy weight on you, but you have to, what I also always sort of felt that I am part of mankind. I'm one of the people in the world, so I feel a real connection to other people in the world, and it's not just in the Netherlands or Europe, but really globally. So this sort of this being part of the global community, I think, has been always a strong inspiration for me. And to connect that to your very individual path as a human being by knowing that you are not just about a smart manager can do things, but only you having a heart and having a possibility to act. So really have an integral sort of approach to yourself and going inside and not only outside. And to make that work in the day-to-day of an organization, bringing the big world into the organization and bring the inner world of every coworker, but also you as a leader to that organization, is enriching for that organization. So if there is room for sort of how is our responsibility to the world while allowing people to bring their sort of most personal inner questions also to the table. That sounds like a contradiction, but I think that's also always a secret to bring those two together. And I think as a leader, if you practice that, if you like that, if you have fun about that, you can share it with others. It's also an inspirational thing for other staff who maybe have not looked at it that way. So I think the very individual personal development and the very sort of big question in society to connect them in your organization, I think is fundamental. And a leader should develop a narrative to make that clear how he or she does that. And not only he or she, but more people in the organization. So create an open space for that. I've always appreciated that space in Triodos very much. I enjoy that, to create that space. And I could really see that people were flourishing in that situation. Sometimes it can be a little bit heavy, all the big problems of the world, and where are you as an individual? And there you need your community in the bank, your customers as well, to support you with that. So you're not alone. And I think also in the meetings with the customers yearly in the different countries, we sort of celebrated that quality that we are, I always said we are not a bank, we are a movement. And a movement means we going together somewhere. And yes, we fulfill the banking function, but we can only do that when you are part of that movement. As a depositor, as a co-worker, We deliberately didn't call them employees, but co-workers. I always felt that was an enriching sort of thing for how we are. So we try to bring those things together. I think that is what you have to tell all the time as a leader. So it's more about a narrative you find and connect that narrative to who you are and how you experience that is inspiring for other people and brings them to a higher level, so to speak, as a human being.
To elevate them. Yeah,
to elevate them. And it's amazing how many people in society are looking for that. I mean, the atmosphere at these meetings was amazing, when you could really bring that. People suddenly realize this is more than just being a customer of a bank. So that is something you have to find out. And I think many CEOs trying that, and I think also in ordinary companies they try that. But we had a sort of fantastic tool in this Triodos value-based banking approach where we could show them. So that was really my inspiration for the many years in Triodos, and still is my inspiration for bringing things to the attention of people. So it can be done, and there is a huge movement you can mobilize on that thing.
Yeah, finish.
Yeah.
I want to say, I think you are testimony that it can be done. You are testimony that it can be done, not only factually. I don't know the details, but Triodos to me is a major example that is setting an example. I know that you refer to, and I know one of the presidents of the community on banking on values, that you made it grow as a community, and you're yourself, I guess, a great testimony because of how much people you're thought after to share your wisdom, both in the Sustainable Finance Center as well as in the Club of Rome, to which you belong. So thank you for sharing your wisdom, your experience here with us. Thank you for the audience. I know we went 7 minutes over. We appreciate that. Peter, thanks again for this dialogue.
Okay, thank you.
Have a good evening, everybody, and see you again next time on July 10th.
Okay, bye-bye.
Bye-bye.